Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we have a triple top in the last 7 days in the low 274s on SPY, 274.08, 2 cents under it, and then 274.25. We did break. Today was the highest price that SPY has seen in 2 months, so that is notable, but obviously we closed with weakness. It was a very low volume day overall, one of the lowest volume days of the year, so that's also worth noting. That's a fairly good sign for the bulls. Increasing bear volume would be a red flag for the bulls, so normal healthy consolidation at this point. I'm watching 2 support levels. You can see we bounced off both these supports from the 8-period exponential moving average. I'm looking at 270.93 and 270.03. If we lose those levels, again, we're in a scenario where the bears have to prove themselves. The bulls proved themselves to start May off. And now for the bears to prove themselves, we have to break 270 and see this little double top and then a lower low. As long as 270 holds, the bulls have the advantage. It's that simple on the daily chart. The weekly time frame, backtesting and holding the middle Bollinger Band last week, trying to do it again this week, and the exponential moving averages got the bull cross, and they're trying to hold the price up as well. So again, bulls do have control. It's up to the bears to change that. IWM, bearish engulfing candlestick, new all-time high yet again today. So this marked the 5th day in a row with an all-time high. That is also notable. And healthy consolidation at this point again. The bull volume bigger than the bear volume, even though we closed at the low of the day. On the daily chart for IWM, anything above 158.17 is a higher low, so the bulls have plenty of space to work with. We're definitely overextended. The RSI got above 70, and we're now seeing healthy consolidation. Rejecting from the weekly upper Bollinger Band, that's not surprising. Look at the last half dozen times we've tested that in the last 6 months. 4 rejections, just pulled back just under it, couldn't get over it last week, and pulling back from it this week. So everything looks normal and healthy here at this point. As far as the weekly chart goes, for IWM, anything above 151.71 keeps the higher low intact. So bulls very comfortable on the weekly. QQQ, choppy sideways action the last 6 days. So the range over the last 6 days is what to be watching. 166.98 support and 169.61 resistance. We're going to see a break of those levels likely this week. And let's see the range from one to the other. 167 roughly to $2.61. So that puts us at about 168.30 to be dead center. So we're right in the middle of dead center, almost there, in terms of this range. And again, break is imminent. Weekly time frame, inside bar currently forming, still healthy. Bulls looking, if we do pull back, we'll watch the weekly middle Bollinger Band for the attempt at a higher low. Bull MACD cross on the weekly time frame, not too far off. Bulls overall holding really well. VIX on the daily time frame. Also, choppy action the last 4 days. Bears still have favor as long as the daily exponential moving averages remain resistance. I'm looking at support of 1277, a little double bottom the last 2 days. And we've seen clear lower highs the last couple days as well. So 1342 and then 1359 are the first couple of resistances. If the bears on SPY break 270, we'll look for VIX to head back over $14. Weekly time frame for VIX. Inside bar, actually I take that back. It was not an inside bar last week. Bears in control, exponential resistance, trying to cling on to our last hourly or our last weekly moving average supports, and it's going to require weakness in the markets to see these bulls try and turn around momentum. Financial sector, let's check it out. Bull break and bull flag confirmation on the daily time frame. Upper wick of profit taking, but overall this is exactly what the bulls were looking for. The weekly time frame is trying to get over the middle Bollinger Band after it has rejected the last few attempts, and we are going to be looking at the bulls likely setting a lower high compared to 29.70, the last resistance here. But these are the makings of a trend change where we have essentially a double bottom and then we broke the lower high. So even if we do form a lower high here, which is likely compared to 29.70, we'll still anticipate a higher low on that consolidation. So overall, a lot more work to do to get back to where we were, but definitely seeing this shift in momentum. XLK couldn't break resistance. We opened strong, but couldn't get the follow through over 70.42. And again, just watching the range of the last 6 days, support is 68.81 and 68.85, a double bottom. Resistance is 69.91 and 70.42. Weekly time frame for XLK, inside bar. And this is a cup and handle pattern. The psychology is there. all-time high, healthy consolidation, inability to break the all-time high, and now a handle of healthy consolidation. If we get the bull break, it's going to see a MACD cross with it and a breakout to all-time highs. Hard to imagine what kind of catalyst we could see in the next few weeks that would drive the tech bulls to all-time highs. And we've got, Apple's close to all-time highs, but in order to see XLK here hit all-time highs, we're going to have to see Amazon turnaround strength. Netflix almost got that all-time high today, so it is possible maybe those buybacks kicking in could be a bit of a help for the bulls as well. So definitely still, again, in full control of the bulls. The bears have to prove themselves, and they're not doing it right now. So that remains the case. Show me something, bears. Otherwise, we're looking for the bulls to maintain on the daily time frame. I appreciate you watching. Keep an eye on that volume, especially when it's bearish, and compare it to previous days. We'll see you soon.